Welcome back everybody into another daily recap. Today is Thursday the 18th of August and we're going to see what happened today on gold as usual. So as you can see here immediately, already in pre-New York, we had the price reaching after a bullish trend, our supply area 1772, 1773, and giving us a first reaction in pre-New York and giving us a second reaction, a clean failing to break with the 830 candles because of we had some very nice and interesting reports. So we had the initial jobless claims that, as you can see, came out 250k compared to the expected 265k, and as well, so it's already better than expected, but it's slightly better than previous. But if you see that it was revised, so that means that even the last report of last week was off by 10k, so that's even better. That means that it's a very good numbers. It's very optimistic for the USA, meaning that the labor market is not being affected that much by the interest rate rising. So for now, and we're talking about short term, and also the Philadelphia manufacturing survey that showed us a big improvement, 6.2 compared to the previous -12 and the expected -5. So that's a very big difference, and it also had an impact. That's why on gold, even at from 2:30, which is 8:30 a.m. Eastern, the bias was only bearish. You see that before the news, we had this pullback again to the supply, failure to make new highs, and confirmation of going bearish. As you can see, then we had the first tap at a demand area, and but the price went and did only a 75% correction of the movement, reacted at the same highs that we had on the left hand side, which is also PPL. So if we remove the retracement tool, we see that the price was reacting indeed exactly at the PPL before going back down. So before pushing again for another quick 50-60 pips scalp, even less, and then this is already getting late. This is already after the 10 a.m. candle. This was the pullback before New York Stock Exchange open, and this is New York Stock Exchange opening actually. So as you can see, New York Stock Exchange opens here, makes the top wick, fails to make a new high above the previous PSA, above a 75% retracement, as I show you again, fails to make it, and gives you candle confirmation of price going bearish for further scalps, or even intraday. If you will look at the range, it ended up going quite low, 60 pips. You have your confirmation here. I will say that there's also a PPL over there. Yes, here, and this is the same rejection, the PPL, and continuation down. As you can see, the demand area was already, it was not the strongest, first of all, then it's broken, then we have the first reactions at the lower demand area, but as you can see, this demand was already touched multiple times, so not necessarily the liquidity was strong, gets broken, and as you know, the demand turns supply, which gives you some bearish price action, especially when you see that after the pullback here at this demand turn supply, you have a double top, and then you have a further confirmation of price going from your supply to the next demand area. Well, as you can see, this is at 28 pips, but of course it's already late. We're not talking about trading, we're just talking about watching the price action and the market structure how it develops. Here is another demand area. Let's see on the 15. I think this is you have to go on a long way back. As you can see here, this is from the beginning of August, has never been touched, so it might give some rejection might be that on the 15 minutes or even on the 1 minute, with this low volume, the price will just go here, or maybe very slowly makes its way down, and then maybe during Asian or London having a pullback if they want to continue down. As you can see, overall that's quite a strong move from the supply and breaking below all the demands, 140 pips. And as you can see, now we're going to watch here. This was the looking at the price action and looking, okay, you already see that pre-New York gave us the perfect touch. We identified that there's possible rejection here, but you can, if you want the intraday trade, this is from supply till demand, so you just leave it run with your stop loss, and as you can see, with the stop loss over there covering the supply area, even with the good jobless claims, a sign of a good economy, the your idea is still valid. Of course, if you are here and the jobless claims are the opposite, then you get the full loss. So that's why here I said that possibly this was a scalp. If you are talking about, okay, I don't want to gamble for the news, might get good but might not be. So maybe you want, if you take this trade and you see these rejections, and I can show you this was very slow, so you had plenty of time to take your 30 pips. Okay, I don't want to risk it for the news at the report, so I will just take my scalp. Then I will take further opportunities with a clear mind. And that's it. As you can see, this is a possible trade that I had with the new 4-hour open, but of course the price actually melted below the demand areas, so there was no trade idea. There was this trade idea though, that price was at this demand. The new 4-hour made the lower wick and this huge candle almost closing. That's why at the candle close I identified, okay, can be the possible demand. This demand has been not strong, so there's not that risk of this demand turning supply, but because this candle setup is very strong. Here there was no setup, here yes, and as you can see it will go 53 pips. This is something that I was not looking at the 75% retracement yet, but that makes much more sense. It's more of the backtesting side of things. Okay, where did you react? Okay, react at 75. That makes sense, especially if you see that in the yesterday, from supply till demand, we had from here to here. Then we had the retracement that failed to make new highs above 50%. As you can see, price failed to make, this is the 10 a.m. candles, New York Stock Exchange, and the 10 a.m. candle failing to make new highs. That's from supply till demand. And then the pullback that fails to make above 50%, or today 75%, to expect the retracement all the way down, at least all the way back to the demand, maybe more. The same, for example, is here from demand to supply. So from here to there, the retracement is 50%. If you watch here on the right hand side, 50%, you enter your buys, look at the candle setup. This time is 35 pips. This is a scalp setup from this pullback till the demand, from this pullback till the supply. It's not okay. I'm not expecting necessarily the liquidity to go and break. Might happen, but might not. So I still have to backtest it. It's something that I'm seeing now. And look at this candle setup. This candle setup is very, very nice. If I can validate that it's making a higher low with the candle setup at a PPL at 50% of retracement, this is a super high probability setup for entering buys, scalps, and taking your 30 pips with a very high chance of having the profits. So that's why, even if it's not, it is almost a 2-to-1, even if it's not 3 to 1, risk to reward, it's still good. Here, maybe you enter the first candle because you see that price reacted at 50%. You enter there. Of course, not buys, but sells. Okay. You enter there. You're still safe with your 20 pips because price fails to make new highs. And that's where you can take your scalp sells for 35 pips again. But if price goes below, then it's just more profit if you want. I mean, for me, will be too late, but that's it. That's just the idea. So I hope you guys enjoyed, and I'll see you tomorrow.